You're welcome back. If you just joined us, you're watching Business Morning. We're coming to you live from Channels Television, broadcasting from Lagos. I am Bolaji Akinwale. It's now time to talk about the banking sector, the financial markets in general. Of course, emphasis is on what the central bank has told the banks to do this time around, which is limiting their currencies borrowings to 75% of shareholders' funds from 200%. And we've been joined here in the studio by Shegun Akunji. He is the head of development finance at Heritage Bank. Thank you, Shegun, for coming on the show.
Good morning.
We do appreciate your time. What do you think about this directive of the central bank on currency borrowings?
Oh, well, precisely. The first thing is that there are three ways to look at this. First is the fact that banking is a business of leverage. You can't deliver solid financial services without engaging leverageable opportunities. And the second point is from the standpoint of risk. Risk institutionally and the systemic impact of that. And then thirdly is the issue of innovation. Now, you would not be right to say that this is a right decision or a wrong decision. It's something that is contextual. So you would need to look at the need of institutions. So if you say that institutions should reduce their borrowing to about 75%, then you probably start to think about how do they grow capital? How do you create shareholder value? We know that in basic finance that the cost of equity is far, far more than that of debt, because you pay for equity into infinity. Debt has a terminal period. If things work well, there is strong cash flow in the business, is able to time out his debt and then create value for shareholders, and which is why people basically invest. So saying that that is limited to 75% is neither here nor there. You can't just say that is right or is wrong, but from the perspective of risk management and exposure to the global market, then you might say, well, it's a good decision. But when we look at the fact that you also want banks to fund businesses, to support businesses, and they need funding to consistently do this, you then would have to ask more questions. That's basically my view.
Now, the question I would want to ask you in that regard is, what options do banks have, knowing fully well that many of them are going abroad to get funds, like you said, trying to raise the capital base. So what options do they have as a banker?
You see, finance is a business of innovation. And the more you think about financing structures, the more you have opportunities to fund your business. Now, as a bank, if you can't go the debt way, there are all kinds of structured financing that you can undertake. Now, it's about how you then, the kind of covenants that govern what funding you undertake. So if for example, now you know that for Eurobond, which is become the mass rush for Nigerian banks, the window is getting closed with this kind of option that CBN has come up with. But however, it's pushing us to innovation. How else can we fund business? How else do we enter into funding agreements and the kind of covenants that drives and the structural combinations that drives what we ask people that provide funds to us to look at on our behalf before they give us money. For example, some of these monies can eventually become deposits rather than investment. What is most important is that your business is fairly well leveled to the point that you can optimally deliver these resources to various sectors that you service. So some of them can actually become deposits. There is nothing stopping a bank from taking deposit that lasts in its books for 10 years.
Without having to use the money to do business?
No, you use it to do business, of course. You can't, even if you take debt, you use it to do business. So rather than taking it as a defined tier 2 funding, you can take it as a 3-year funding, which does not qualify for tier 2, and can have all the options. What is most important to an investor is how is my money secured, and number 2, what are the covenants governing these deposits? Okay,
let's take a look at the issue of exchange rate risks you tried to talk about earlier on in terms of the pressure that it may have on the Naira. Perhaps the central bank was trying to ease pressure on the local units. As more banks are borrowing more dollars to cover interest payments offshore, and as demand for imported goods stay high as at 80% of all non-food consumption. What's your take on this difficult balancing act by the central bank, really? Because, of course, it's trying to stabilize exchange rate and showing that the naira doesn't fall below the expected level, if at all it has to.
Well, at the base of economic consideration is the rule of demand and supply. And we say ceteris paribus, which means all things being equal. And we all know that all things are never always equal. And so what do? The first thing is, look, we need to take these first from the economic position. What's the physical outlook of the economy? You cannot limit the capacity of banks entirely to do business, because they must do business for GDP to even grow. Okay. The next step is, the concern is, how do you then create a pool of FX earning that would support, give base to the currency, so that you don't continue to have slides. Then we know basically that what we needed to do, which is always said, is how do you expand exportable opportunities, so that people, rather than importing, we create exportable opportunities. And that is where I think government should focus on more. For example, there are a few sectors today that are driving the world, and we're not doing too much about it. Look at the commodities market, which is a very huge market in this country, because you have all manner of commodities that are needed all over the world. If you look at the consumption of things like lead and zinc in battery production and things like that, order from China and other parts of the world, if we actually create structure and have a well-defined market formation, market development and financing program that supports the commodity market alone, you can just not imagine the kind of effects you will earn. Look at even a Greek. Today, tons of Nigerians live abroad, for example, and they eat local food. They want to have local foods. What do we have that support things like ethnic food financing? These are huge opportunities. Nigerians live all over the world, and even white people now try our food. These are the things. Ethnic resource financing. What structures do we have? People struggle to use their own resources to get this food out of this market, send it abroad. We need to create platforms from the banking perspective and from the economic program perspective, which is what countries like India have done fairly and manageably well, which is what China is doing, exporting its own people, its money and resources to gain development, to create employment. Now they create employment out of China for their people, because they send out money and send out their people alongside their money. Send out technical competencies, send out infrastructure, send out equipment. So it's a combination of delivery. So we need to look back, starting from endowment. I mean, move away from things you don't have capacity to do. Look at, from natural endowment point alone, start to look at commodities, agriculture, which we need to create platform and structures around to generate resources that can support growth. And then look at the secondary opportunity areas where people can also earn that kind of effects and we support businesses. After all, look at countries as small as Gambia, for example. These countries still get to sustain themselves, even though they don't have so much, and we earn so much from tourism. Why are we not earning so much from tourism?
Okay.
This
has made us to go abroad and get funds. I just want to ask you, do you think that the debt market in the country is oversaturated? Because many of the banks are going out to the floating euro bonds as a way to increase the capital base. Do you think that our own market is oversaturated? With government, selling bonds and of course raising money in the country?
Reverse the question. Why do banks go abroad to look for money? It's a reflection of the economy, number one. Because since I have to finance a lot of importation, so I have to open LCs, I have to pay at due dates, and the people that are here, most of the things that they buy, they sell them here in Naira. Okay? So for me to be able to effectively service them, I cannot continually meet up their needs by always bidding. So what I then need to do is to have stock of FX somewhere there, okay? Either as foreign lines or as funds that have been raised. I can finance all these, okay, without exposing my naira position. So that's why banks are doing that, because it's reflecting. It's reflective of where the economy is. If we do a lot of importation, people are always bringing things in, then we need to provide opportunity as a bank how to pay for that, because they will come to you. So that is just what we need to correct. It's that basic. So how do you ensure that exportation and importation achieve more equilibrium at the least? So these are the things. So we look at sectors we can develop that can create that platform of equilibrium, and then you begin to see that there is a balance in the way the naira slides, and then gain appreciation. You don't only depend on a lot of monetary policies all of the time to keep the naira stable, or intervention, serial intervention, which is what is, because if you take out that serial intervention, then you will see what the value of the naira really is. So that serial intervention is what we need to correct by a more stable and established comprehensive economic program.
All right.
Then the CBN can support in terms of financing and creating stability for the currency.
I want to believe that you see these numbers every day more than I do. So I want to ask you, are there banks that may have borrowed up to 200% already of shareholders' funds before this directive came?
No, typically.
So what do you think they would do at this point?
They've been given 6 months to regularize.
Meaning what?
They have 6 months to regularize, to bring it down to 75%. So what do they do?
The money they have borrowed?
Yes. What you do is, that comes to what we call balance sheet management, basically. So it's either you're going out to raise more equity,
okay,
to show up so that you can achieve the 75%, or you are going to deleverage your balance sheet and pay down your obligations.
Okay.
So you either pay down your obligations, or you raise more capital to meet up, or if you have opportunity to earn more money, then you retain a lot of that from whatever earnings that you make. Maybe this year up to now, you probably just retain them rather than pay out dividends.
Do you foresee any challenge in this?
I do not functionally see, but technically it depends on the structure of the balance sheet of every institution and the structure of the capital that they have now. Okay, so if you have tier 1, lean tier 1, and you have bloated tier 2, foreign lines and all of that in doing business, then of course it's going to be a problem. So you have this opportunity to look at how do you improve on tier 1, or how do you renegotiate what you have in terms of the kind of covenants that guide them, so that your exposures come down. So these are the things, and the options are open for banks. It's about innovation and thoughts. If you're able to put the right thoughts through it, and institutional investors out there are willing to do business with you because you have been consistent, you can always reach a compromise that would ensure that you keep your business going.
Thank you, Segun. That'll be all we'll take from you. Thank you so much, Segun Akonje. It's the head development finance at Heritage Bank, and we're talking about the recent directive from the central bank to deposit money banks in the country to limit the foreign currency borrowings to 75% of shareholders' funds from 200%. And that'll be it here on Business Morning. We do appreciate your time with us on the show. Thank you for watching. I am Bolaji Akinwale. News track is up next.